banks in Africa and the Caribbean will play very important roles in fast-tracking the discussions around trade and investment between the regions, which was the focus of the just concluded Africaribbean Summit 2022 held in Bridgetown, Barbados. A panel at the summit, attended by high-profile speakers, examined key challenges of financing gaps to facilitate trade through the banking system of both regions by de-risking investment opportunities. Here's an excerpt of that discussion.
That you think to be pursued.
The reluctance or the limited appetite that banking entities have to extend new credit to SMEs. Our staff, in doing some research, found one bank indicated that generally they won't want to lend to an SME until it has at least 2 years of experience of producing the good or service that they're producing. So that, to my mind, it's not so much the regulatory landscape. Yes, the regulators have become, have placed more onerous regulations on the banks. We've asked them to do more things. We make sure you have financial statements, et cetera. That is something to which obviously a lot of the SMEs are unable to comply with, and therefore, if you don't want to run afoul of your regulator, perhaps you will decide that you don't want to provide credit at that point. But I think generally, the bigger problem really are the structural problems which SMEs face rather than the regulatory landscape itself. As Ian points out, a large segment of our community is really micro enterprises and small business and what we call small businesses. And when we talk of small businesses, it's really not the same thing that you might talk about in Africa, because a lot of our businesses have less than 5 employees. So we have essentially lots of micro businesses. I think a study that was done a few years ago suggested that almost 50% of the businesses that we have are actually micro businesses, and almost another 40–45% are what you would call small, and by small they were talking about 25 employees. If you look at the European definitions, you know, we're all micro businesses basically, rather than being what you would say are SMEs, traditional SMEs. So it's that structural factor that I think we have to look at. How can we address that structural factor while trying to encourage our lending institutions, nonetheless, to be more open to being able to provide credit, not so much because of the regulatory, but how can we foster growth in our economy? And it's going to have to depend on our ability to be able to finance these small businesses that are creative, that are willing to to be innovative. And I think our financial institutions have to therefore increase their appetite to take a little bit more risk than perhaps they have done over time. And I'm speaking as a regulator, but I think that they need to take a little bit more risk than they've taken over time in order to ensure that there's greater access, because governments will try to provide other funding activities through, we have fund access and enterprise growth fund, which are trying to lend to these types of businesses. But these businesses don't have the capacity to do the type of lending which is really required for these small businesses.
You know, and again, we talk then about small business, and he's mentioning that, you know, we all recognize that for this whole trade and finance, a lot of this export to work and is going to be fueled by a lot of what we call some of our small business companies. And if you are saying what you are saying, what are then some of the solutions that you think to be pursued?
The governor said something that the reason SMEs have a problem of getting finance is not due to regulatory reasons, but the banks don't really lend to them. Now, how would you blame these banks? I have some solutions, by the way, because you see, these SMEs are not structured. It speaks about structural problems, governance problems, and things like that, right? And that's because perhaps, so what's happening here is the commercial banks find it very difficult to bring these SMEs up to the stage where they consider them bankable. Because obviously the models that are used to assess risk are the models that we have always just downloaded from cultures that are completely different from ours, okay? I think we should begin to look at certain, you know, we should begin to look at homegrown solutions. Seriously. Yes, we do know that there are structural issues. Yes. We also look at the fact that some of these SMEs are over-reliant, over-dependent on the traditional lending, equity loans from banks. But there are other products. And when I got to know Africaribbean, I knew that Africaribbean Bank was solving a lot of these problems already. I mean, there's factoring, supply chain finance. There are things like that, okay? The structural issues would always be there. They are there. But there's one very fundamental thing that Africans used to do and still do in a lot of communities, which is community-based lending. It's this thing, I think it draws from the philosophy, Ubuntu.
We call it Susu.
Because you are.
Susu.
You call it Susu?
Susu.
Susu,
yeah.
Exactly. And you have these Susu things. So this cluster-based lending would work for SMEs, okay? But obviously infrastructure has to be there. Right. So you need, people. When I look at how you try to rate, you're using the rating models that a Fitch would use to rate the man who is, doing business.
The idea of that program today is to support trade and investments between Africa and the Caribbean. It has financing elements to it, and it has non-financing elements to it. So that you people here know that we are ready to do business. This is not just another gathering. It is a gathering where we want to support whatever trade deals or investment deals that are concluded in this forum can be financed. Professor Rama this morning talked about a $750 million package for the Caribbean upon, as we start our intervention following the partnership agreements that were signed. He also mentioned about a $250 million facility, and that $250 million is a the Caribbean Africa Trade and Investment Promotion Program. That program will support financing deals. For instance, earlier on I did hear one of my colleagues here talking about industrial parks, for instance, that sort of the things, trade enabling infrastructure, ports, sea links, air links. The discussions around air links and logistics have been so prominent in this conversation today. We will support the creative industry as well. It's interesting to hear Gabby talk about the cluster financing under our creative industry, creative and cultural industry program. We actually have cooperatives financing. Because of the unstructured nature of some of the creatives, especially in the fashion sector, we also have financing those. We will finance, the other thing I want to talk about is we also lend to financial institutions, commercial banks for on-lending to their clients as well.
From a policy perspective, Gabby mentioned a lot about it. Madam has talked a lot about it. We actually need to make a deliberate attempt to bring the structural issues into policy and enshrine it. And then we need to have a tariff arrangement so that our markets have an equitable play in the game and are not sort of quote-unquote disenfranchised by the bigger markets. We also need to make sure that in that policy arrangement, we also have quotas and the relevant things that will make trade safe for all of us. If that is in place, then we need to be able to facilitate the payment. So we need to also have a deliberate attempt on regulation. The time has come for both Africa and the Caribbean, I believe, to ask itself, the models we are running, are they homegrown? The banking models and licenses that we have, are they going to factor this growth that we're looking for? Remember, we're creating a 3 trillion market with a possible market of 1.5 billion, if you even extend it a little bit into the Latin markets. So if we're creating this new world, this new order that we are calling it Africa-Caribbean Union of whatever sort it will be, then maybe we need payment banks, we need correspondent banks, maybe we need specialized banks that are just trade banks. If we have that from a regulatory standpoint, then I think we can start talking about products. I think from a product perspective, Africaribbean Bank has been a wonderful thing we've been able to achieve today. They should extend that. Can we have specialized credit lines that counterparty banks are all pulling from the same pool? So for example, one bank in maybe Accra has $5 million for this particular project. Another bank on this side has another $5 million. But it's from a common pool. So because it's from a common pool, then you can build products to disperse out of that pool because your risk is taken care of. That fear has disappeared. Then we can build, obviously, the regular compliance issues around it as we make this transaction safe. So if we do that, then we can start talking about some receivable finance, whether it's a form of factoring. But if you do it that way, then when Bank Y issues the instrument and says that I'm paying out of the kitty that Africaribbean Bank has given me, the counterparty bank on the other says, yes, I recognize that, I know this fund, I've got the same fund, it's from the same parent. Then we can bring the technology. That's why, I believe that the technology comes in to disrupt the process and says that when that export is about to go onto the ship, it's being tracked. There's an instrument issued of maybe $5 million. The other counterparty on the other side is very aware that the money, the product is coming. When it's on the ship, it's being tracked. When it gets to the port, it's being tracked. It's going through a quota scheme. It's going through some tariff trade benefit scheme. So all along, technology is also making it possible. Then at that point, the local bank can say, hey, you know what? The product has come. It's gone through inspection. We'll release it. So payment is made on the other side.
The bank is now becoming the model DFI and addressing market failure. One of the critical market failure we're seeing is shifting regulation and big banks leaving the Caribbean, leaving Africa. As they leave, we buy them out. That's what we do. And that's how we built Vista Bank. We bought BNP Bank in Burkina Faso and Guinea. So, and because their model, as someone mentioned here, is not the same as our model. The reason why they were there is different from the reason why we need to be there as a trade finance intermediary, working with Africaribbean Bank to promote trade, to promote intra-Africa trade, financial inclusion, finance SMEs, and provide some of the innovative and critical instrument that's needed to lift Africa. So if we learn from what we have benefited from the instrument that Africaribbean has put together to address those market failure as it relates to corresponding bank, there's a product that they put out called AFTRAFT, the African Finance Trade Facilitation Program. Essentially what it does, it pulls a number of banks, big banks in the market, JP Morgan, Citibank, Sunchart, all the mom and pop big banks that's out there that will not directly deal with small banks like Vista Bank or Oakwood Bank, and we will accede to those corresponding banks. That's an immediate solution until we get to that working group that Andrew was talking about. Africaribbean has a model that works very well today, from which we're benefiting and doing all of our trade financing for either SMEs or in any enterprises in Africa that is our client today. And it's working out very well. The model could be replicated here in the Caribbean, because I do see also a shift in the market with issue of corresponding banks that is preventing Caribbean bank to do trade and promote trade and could do LC confirmation. There's a model that can be replicated. The same model also could be used to promote Africa and Caribbean trade. And in that sense, I think that someone mentioned, we will be controlling our own vehicle, our own instrument to enable us to trade. Because if we were to solely rely on third parties, and that third party risk or shift or dealing with, could be well handled by institutions like Africaribbean Bank, institutions like the CDB, the Caribbean Development Bank, together with Africaribbean Bank, can come together and put an AFTRAFT, a facility similar to AFTRAFT, to promote Caribbean and Africa trade. Yeah. The other thing is also that's causing all this issue with regulation and corresponding bank pulling out. It's KYCs, knowing your customer. Again, addressing market failure. Africaribbean put out a platform called MANSA to address corresponding bank issue. You got to know who you're trading with, ultimately. So if you're a Caribbean businessman, entrepreneur doing business today, I will encourage you to go on a MANSA platform and sign up and register. And we have done that for all of our bank. We sign up the bank and we systematically sign up all the customers of our bank. And we encourage them as part of our onboarding process to be part of MANSA. and keep updating their financial information so that the day they want to do a trade or an LC, and then we present it to our Afrexim Bank to do the onboard confirmation, it goes smoothly. And that goes back to your question in terms of processing any application that's being provided. It's on us as a bank, and it's also on us as business people accessing those DFI to provide them with the information that they need to process swiftly the whatever facility or whatever request that were made to them. Our experience has been that things have moved smoothly every time the bank has asked information that we need to provide. Obviously, they will give you a timeline. There are delays, like any other institution, but it's been pretty fast and pretty smooth. The key is to provide the information. But I think we do have the tools in our hands that we can learn from what they have done in terms of addressing some of the market failure. You know, Mansa is a clear tool. AFTRAF is a tool today that we can potentially use. And if Afrexim work with CDB, putting together a bigger AFTRAF package that will help promote Africa and Caribbean trade.